Welcome. Thanks for tuning in to YourMarkets.com Global Markets Update. I'm Luisana Swegard. Markets in the Asia Pacific had big drops following the slide in the U.S. markets yesterday. Both the U.S. drop in retail sales and falling commodities took hits on the regional markets, with the MSCI Asia Pacific Index falling 8.5%, its biggest drop since its inception in December of 1987. The Nikkei was down 11.4%, its largest fall since the crash of 1987, on expectations that exports to the U.S. will fall as consumer demand slows. The auto sector in Japan, which is reliant on U.S. auto sales, was down again, with Honda falling 10.2%, Nissan down 11.4%, and Toyota down 9.3%. The electronics sector was down on fears that slower holiday sales in Europe and the U.S. will mean lower earnings for Japanese firms. Canon was down 12.2%, Sony fell 12.9%, and Nintendo was down 10.4%. Also weighing on the Japanese markets was the strengthening of the yen, which is making Japanese exports more expensive as it rises. Australian All Ordinaries Index was down 6.7% due to the falling commodities prices. Resource giant BHP Billington was down 13.1%, along with Rio Tinto, which was down almost 16%. Woodside Petroleum and Santos were down almost 5.5% and 15.5% respectively on the lower price of oil. In South Korea, the Kospi was down 9.4% as the won depreciated 9.7% against the US dollar. The won is now down 32% for the year against the dollar. The fall in the currency and the ongoing credit crunch also caused the S&P to warn that the Korean banks may not be able to refinance their debt. Meanwhile, in Hong Kong, the Hang Seng was down 4.8% as shippers weighted heavily on the Hong Kong markets. China Shipping and Development was down over 25%, with China COSCO down just over 16%, and